Hello, this is Shelley Johnson coming to you with greetings this holiday season and also with a slight silver lining idea related to this COVID mess that we've been dealing with so long. So let me refresh your memory, or if you didn't recall seeing this last year, bring to your attention tax deduction. It can be a tax deduction for you and a way to help your employees. So I am going to go ahead and turn off the camera and move on to our slideshow. So even disaster has a slight silver lining. And this is an idea using the tax code that we like to refer to as a green light, something that is completely allowable within the tax code. It's also known as Section 139 disaster relief, allowing a business to deduct expenses that normally would be considered personal expenses and not a deduction. Given the time of year, I'm also calling it just a little bit of a holiday miracle. So this would be assistant payments that you're going to make to your employees or others related to a nationally declared disaster, and it's a way to compensate them without it running through payroll. So that's the big key piece. This is not going to be a payroll taxable item for the recipient. That also means no payroll tax for you as the employer and no income tax for the recipient. Everybody recalls back in March when the national disaster was declared. And this particular section of the IRS code came about after 9/11. It's typically invoked or used when there's a physical type disaster, such as 9/11, hurricanes, that type of activity, tornadoes. But in this case, it was also invoked given the situation with the pandemic. So this started back March 1st of 2020. And we are comfortable on a federal level that this goes through at least January 15th, 2022. The last declaration was made November 15th, extending the disaster declaration, and each extension is valid for 90 days. So that would take us to January 15th of 2022. And here's just some history on the dates of these other declarations that have happened in the past. Now, on a state basis, the governor's directive executive order currently is going through December 31st of 2021. Other states may have different expiration dates. Being that this is a deduction considered at the federal level, I would be comfortable using that federal January date. So what does Section 139 mean for the business owners, for the employer? The expenses that you're going to reimburse, they need to be reasonable. So it can't be something just totally unusual, off the wall, no relationship whatsoever to COVID and the hardships that have come about from COVID. We recommend that you have a document where the recipient acknowledges the reasonableness of those funds. The amounts can be different from employee to employee. There does not have to be some of the discrimination rules that you run into with things like retirement or other compensation. So you can be very discretionary on what you reimburse. It's also not spelled out in the code that it's employees. So you could consider maybe you have a key vendor or a key customer that you want to help ease their burden with COVID. Again, same requirements. It needs to be reasonable, needs to be linked back to a COVID hardship. So we don't feel that it's limited to just employees. And again, the kicker is this is not included in the recipient's gross income. It is a tax deduction to you, the business owner. So what does that look like again? You adopt a Section 139 plan, determine what the cash payments are going to be to the recipient. You make those payments. The recipient's getting tax-free cash. We recommend that you have them sign that it's and acknowledge that it's a reasonable reimbursement. And then the tax benefits are, it is a deductible business expense. And again, not taxable to the employee. We have sample documentation. Documentation is not required per the code. However, we do recommend that you do have adequate substantiation for this program. And if you would like a template, you can certainly let us know. This is just a fine print. Again, I told you that this started back after the 9/11 disaster in 2001 and has evolved from that. So what are some examples? Again, we list a lot of things related around keeping everyone safe and healthy. It could also be around all of the disruption that's happened with the schools and the daycare programs. Also working from home. There's not a way under the current tax code for employees to write off any home office expenses. So again, this is a way that you could reimburse the employee for those type of expenses and not have it trigger income to them. Now, if you're already reimbursing, say, cell phone or internet under an accountable plan, you could not double dip and do that. And any unreimbursed health-related expenses that an individual has incurred. It could go so far as covering critical care or funeral expenses. If there's things that you want to do to support the employees through mental health or other programs and fitness. If they've needed to have extra costs to stock up on food for quarantines or due to supply concerns, including delivery fees, those type of things can be reimbursed. And then if they've had kiddos, family members coming home from college due to disruptions in the college schedule, that could also be a legitimate reimbursement. You're not going to double dip. So anything that's covered by insurance or some other source would not count. Anything not considered reasonable or non-essential. And this cannot be in lieu of missed wages or other such type of taxable compensation. If it's something that's been covered by their health insurance or other health programs, then again, you could not double dip and have those type of expenses be reimbursed. If there's no connection to COVID or if it were to predate COVID, that would not be an applicable expense. So give some thought to how you want to implement this. Determine, are you going to do a flat amount? Are you going to look at what actual expenses were? Are you going to do it across the board, or is it going to be for specific recipients? We'll take a look here at some ideas of how to come up with these amounts. Again, I recommend that you adopt the program. Have your recipients just sign an acknowledgement of the reasonableness, make the payment. and it's a deduction for business expenses. So if they have kids home from school, you could look at what are the additional costs for feeding them from home versus feeding those school meals. Same thing if there's college kids at home. You can take a look at the home office, if there's additional childcare. There's pretty much anything that you can justify related to keeping someone healthy or supporting them during the challenges of COVID, as long as it's not being covered by some other program, should be able to be a legitimate example of a 139 reimbursement. Now, in my date up here, I did not update my slide for this year's program, so keep in mind that you'll want to do your dates. If you did 139 last year, you may want to pick up where you left off and carry it through this year. And then depending on whether you want to use the federal date of 1/15/22 or you want to be more conservative and use the Indiana date of 12/31/21 or whatever happens to be for your particular state. So you implement it, you document it, distribute it. I'd recommend 12/31 or 1/15 being your cutoff date for doing this. If you want it to be a deduction for this year, most of you are probably on what we call cash basis for your tax return. So whatever expenses you write before the end of the year, those are your deductions for this year. So if you want to get it in for a 2021 deduction, or if you think 2022 is going to be a higher income year, then delay it and pay it after the first of the year for a 2022 deduction. So just because it seems a little odd, weird, it sounds too good to be true, it doesn't mean that it's not a green light in the tax code. We're here to help you navigate additional COVID support. And if we've not talked about employee retention credits, we need to be talking about that. Take care. Thank you.